Welcome back to the Digital Asset Report. Bitcoin pulled back to $64,000 this week after touching a monthly high of $65,500 on Wednesday. Profit taking combined with fresh Iranian strikes on U.S. bases in the Gulf sent crypto lower across the board. Ether dropped 1.7%. Most altcoins are in the red too, with bears clearly leading price action. Bitcoin is still about 10% off of June lows as the market digests the ongoing macro. On the regulatory front, the Clarity Act is entering its final stretch. President Trump sat down with senators Thursday to work through the bill's toughest remaining issue, ethics restrictions on his own crypto ties. Senator Elizabeth Warren has pushed back hard, calling on Senate leaders to add guardrails that stop the president and his family from profiting off the industry. Trump has urged the Senate to pass the bill, invoking the late Senator Lindsey Graham as a longtime supporter. The Senate leaves for summer recess in early August, so time is running short. Senator Cynthia Lummis says the bill is ready to move. Take a listen.
Well, it's taken us virtually every day for the last 10 months to get this bill in the condition it's in today, and we're ready. So we will be introducing in the next few days. We're going to be in session now for 4 straight weeks. It's very important that we get this bill across the finish line before the August recess begins, so we can make the markets aware of the stability that will be provided to them if they remain onshore in the United States to do business. This is a pivotal time for the industry, and we want to meet their needs. We also want to meet the needs of law enforcement with regard to preventing illicit finance and provide consumer protections. We think we've accomplished that goal with this bill. It's been arduous, but we're ready for prime time.
Meanwhile, BlackRock CEO Larry Fink says the market has found its footing. He told CNBC this week that excess leverage has washed out of digital assets, that levels right now look more stable.
There is no question, as I said it in earlier times that I was here, I was always worried about the leverage in Bitcoin and crypto. There was too much leveraged players in it. That's why we had the washout, and I think there's more stability at these levels here. But no, we don't see that much implicit leverage. For the scale of the capital markets today, the leverage is not as large. I mean, that doesn't mean there's not pockets. But no, as I said in my prepared remarks this morning, I'm very bullish on the markets over the next 12 months.
On the product side, Rowe Price just launched its first actively managed multi-token crypto ETF, trading under the ticker TKNZ. The fund opened with about 15 million in assets, with roughly 41% in Bitcoin and 18% in Ether, plus a notable stake in Hyperliquid's Hype token. Big infrastructure news on Wall Street too. DTCC just moved tokenization from testing into live production trades. Nearly 40 individual firms took part, including BlackRock, Vanguard, JP Morgan, Goldman Sachs, and the New York Stock Exchange. We're excited to say BitGo was right there in the mix too, acting as the settlement layer powering this pilot. The trial tokenized real assets, including Microsoft shares, the QQQ, and SPY ETFs, and US Treasuries. These tokens carry the same ownership and dividend rights as the underlying securities. DTCC plans a full commercial rollout in October. Meanwhile, a new Bitcoin Treasuries player has entered the scene. A firm called Orange Juice raised $40 million to launch a permanent capital company that buys and holds American businesses while building a Bitcoin treasury. The team includes Bitcoin investors Jeff Booth and Lynn Alden, with backing from Grupo Salinas and founder Ricardo Salinas. And overseas, Japan made a major move. Its parliament passed legislation reclassifying Bitcoin and crypto as financial assets, folding them into the same rules that govern stocks and bonds. The change opens the door to spot Bitcoin ETFs in Japan and cuts the top tax rate on crypto gains from 55% down to a flat 20% starting in 2028. On the enforcement front, the US Treasury added 4 crypto wallets linked to Iran's central bank to the sanctions list after the Iran ceasefire broke down. Tether responded fast, freezing 131 million in USDT tied to those wallets. That brings the total frozen from Iran's central bank to roughly $475 million across 2 actions this year. And in payments, Visa just rolled out a new stablecoin platform for banks and fintechs. It lets institutions mint, hold, and move stablecoins all inside the Visa's existing risk and fraud systems. The rollout starts with a dollar-backed token called OpenUSD and is currently available to a small group of early clients. That's it for today. If you enjoyed this video, be sure to give us a like and follow along for more.